bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
What is going on YouTube? I hope everybody had a fantastic weekend. Weekends are always the best. It is Brendan from Market Makers, the Baba Yaga of TA. I'm here to guide you through these markets, guys. Notice the thumbnail, 50 Shades of Red. What is that all about? It's about all the macro headwinds this market's facing. We're going to cover Bitcoin. We're going to cover Ethereum. We're going to go over a couple of key trades that I like still, a couple of trades that are in massive wins, and of course, just a normal TA and market commentary, guys. I'll try to get you in and out as painless as possible. All right, so guys, this video is going to be brought to you by SimpleFX. If you want to check out SimpleFX to trade on an exchange where you can trade all the assets that we talk about here on the channel, trade cryptos, Forex, equities, commodities, everything with up to a $5,000 instant deposit bonus. Use our link, support the channel. It will be pinned in the YouTube comments as well as the video description. Instructions, everything is there. And BingX for the traditional crypto exchange where you don't need a VPN. If you want to be on a crypto exchange without a VPN and get our bonus, check out BingX. Both of these guys, both of these exchanges will pay for you to join our room for free for a month. Our Discord link, all that good information is in the video description and it is pinned. Message Lee and Telegram after you download one of the two apps and we'll get you set up in the room for free. It is popping in there, guys. Just about 13,000 people on the Discord. Lots of different trades, lots of fun. Come check it out. All right. S&P, what are these 50 shades of red, Brendan? Why are you so bearish all the time? Blah, blah. All right, so here's the thing, guys. We have the debt ceiling debate. So we have the Treasury Secretary Yellen out there in the working for the Biden White House saying that we could run out of money. The U.S. could run out of money to pay its debts by June 1st. Now, why is this significant to us as traders? Last time this happened in 2011, the S&P dropped 18%. So they still have to work that out. Guess what? That's only a couple of weeks away, guys. 3 weeks away, going to see some volatility. That's one shade of red. Another shade of red we have is the impending recession that is coming. Been over a litany of indicators, leading economic indicators, year-over-year continuous unemployment claims. You have the yield curve inversion, all that stuff you guys know from watching this channel, so no need to rehash. That's another shade of red. And yet another shade of red is the CPI coming out this week. And guess what? The Fed is predicting it'll be slightly hotter on the headline CPI, meaning the headline CPI went up slightly, according to the Fed, if they are correct. The rest of the CPI is supposed to come in just about at expectation, meaning inflation is sticky. Had very hot job numbers this past week. 250,000. I don't put too much weight into that, non-farm payrolls, because it's going to get revised over and over. But still, the Fed looks at it and that was hot, meaning the economy is still too strong. And we also know, because if you watch TV, everybody still says soft landing narrative is still possible. Why? Because unemployment is so low. It is 3.4%. Showed you guys that chart many, many times. Boom, here it is again. Lee, throw it up just so you can see. They don't know what they're talking about with unemployment. It's a lagging indicator. If you look at the chart, guys, if you look at the chart, unemployment is always at a cycle low before it starts to rise. The recession hits, which is all but guaranteed. Guaranteed. And then what happens? Unemployment spikes up every single time. The Fed has a target of an increase of 1% unemployment. Extremely difficult to gauge unemployment. That's like trying to keep inflation at 2%. How good of a job did they do that? It's going to be difficult when the job losses start. You're going to see everything roll over. Of other interesting note, Warren Buffett made billions of dollars in profit. He just took $13 billion, 13.5 billion out of the stock market. Lee, throw up the Reuters article. So he took $13.5 million out, billion dollars out. Why would he do that? Well, I think most savvy investors, know a recession is coming. So you want to protect your wealth. That's mission one. Protect your wealth if you're not trading. They know a recession's coming. The S&P historically on my screen will trade down 1/3, 33% from the high in the cycle, puts you at 3141, meaning at some point the S&P is coming down. It's making our double top here, breaking your neckline, and you're coming down to the 3141. Euphoria will be back in the market. Great, the bottom's in. Morgan Stanley, Mike Wilson, JP Morgan, Marco Kolanovic, Citibank, Bank of America, they all will say the bottom's in. You'll get a very great rally. And guys, that rally, been over that many times, the rally that comes is going to determine the trajectory for the market, if it's a bubble or not, because if it comes back down and sweeps this low, which I believe it will, remember my base case is more bank failures, more calamities. This is a serious multi-pronged super bubble, everything bubble, my boom bust bubble. I think you're going to sweep this low and you'll be coming down to our target. And we'll be sitting around 2000 on the S&P. I think by mid-October at the latest. Could go into 2024. Who knows? Doesn't matter. Don't care, because we're shorting it up here, right? This is what we've been doing, trading this range over and over again in the marketplace, capturing these trades. Okay, these are all trades. One of these is going to break and it's going to be a massive windfall. So that's where we're at with that. We'll go over the pivot dates on the pivot pattern, guys. But that's what I think is coming with the economy. Market may be on pause today, tomorrow, waiting for the CPI print. So we'll see what happens with that on the week or 3-day time frame here on the S&P. Getting close to, you just bounced off the overbought range. We've had, last time we were up at this range, we had a nice 9% move down. Expecting volatility this week, especially with the CPI. You look at this on our pivot pattern, of course, we hit our pivot, boom, 120 bar drop, rally back up, another 100 handle plus bar drop, and 100 handle drop, and then came back up, and we're retesting the same range, guys. So this is the same range that we've been trading over and over again, 4143 to 4173. If you want to include the wicks, you could call it 4180, whatever. Basically, you hear everybody on TV say 4200. So that's the range everybody's watching, and it's just all chopped just like this, a distribution box. You need to break through here, defeat 4200, and flip it to really get bullish in this market. And again, if you did that and did your Livermore pivot, your upside risk potential is basically 42.89 in the market. So we would have this coming down to a bottom on June 14th, okay? Hitting our 3141 June 14th. Then you will get a rally, if you look at my pivots here, till August 14th, the exact same setup we did last year. Not to the date, but the same time periods, okay? Rally to August, and then you'd be coming back down for your bottom, your final bottom in October. If this plays out the same way the last two bubbles did in the 7-year cycle, we would be bottoming this year. Lots of people think it's going to go into 2024 because of how hot the economy is. We shall see. One thing I know is markets will dump 5 to 7 times faster than Minsky moment, the panic selling, then they will rise. The dumps will happen very, very quickly. So we'll see this and how it plays out. And we got a big print with the CPI coming. Let's go ahead and move forward. Looking at the S&P, guys. If you look at the S&P here, S&P, we're at 4135 at the time of making this video. Again, this is a zoomed in view of your 4143 to 4173. You see your Wyckoff trading range. I walk you guys through this all the time. There's your buying climax, your reaction. You get your up thrust to 4173. You see that? You get your sign of weakness for your down thrust. You get your sign of strength back up. You're just ping-ponging. This is Wyckoff, okay? You're ping-ponging, following the movements of the candles, down thrust, sign of strength, and now you up thrust it right to 4143, and you're struggling here. And what the S&P needs to do, as in every case for a Wyckoff to become bullish and break out, you pivot out. Most likely going to find resistance right back where you've been finding it, 4173. Come back, try to hold 4143, and then pivot out to the upside. That's your breakout if it does that. And if it does that, with a lower CPI print, for instance, you'd be looking at your 42.89, the 1618, which you got to all the way back in August of last year. If you don't break out and you just roll up for another double top, then you would be doing this again and you will start to break down. That was your 9% drop we traded last time. So these are the areas you want to watch. Key support area you want to watch is right around that 40.72, where you keep down thrusting, getting wicks below, and then getting a follow through sign of strength. Key resistance has not changed, 41.43 to 41.73. Bitcoin on the weekly, guys. Looking at Bitcoin again, you're starting to go sideways here on Bitcoin. One thing you can do here on the weekly too, just to really illuminate what's happening here with Bitcoin. We can go all the way back to January 2021, right? This is a key support area. You see this? Key support area. Key support area after you made your first all-time high, multiple wicks here, got your impulse up for your current all-time high, tried to hold it here, fell through it, and then where are you struggling? Right around that same range. That's 28,892. Will vary a couple hundred points depending on your exchange you're looking at, but 28,892, this is what you're struggling with here in the weekly time frame. And guys, this is going to be a struggle, and I'm looking at Bitcoin as a canary in the coal mine. I'm looking at Bitcoin to give us some guidance of what the liquidity picture is in the market, the risk on appetite in the market. If Bitcoin starts surging up, then I would expect more upside in the markets. If Bitcoin really starts falling apart, then I expect the markets to follow, or the markets could fall first. Again, we don't know, but I do view it as a good picture, not a perfect picture, but a good picture of how the overall market views risk. And so those Bitcoin targets, guys, we hit our denial target minus 50%. To the candle here, 33,807. We had our FOMO rally coming down to 15.5, which on my chart was 18.4. Came down to 15.5, looking for that second FOMO rally when this starts breaking down to happen down here at 12,888 to 13.2. Okay. And then when the markets hold, I think this is going to we'll just see how accurate this plays out, because I think you're going to be at that 12,888 to 13.2 around the same time. The S&P is going to be what 3,000 to 3,300, which is my baseline target of 3,141. And then you should get a nice rally with the equities markets. And again, that rally will determine how well you hold up. Now, I posted a short on our Discord. I think it was on Friday. Got a great trade here on Bitcoin. Shorted up here on this pump. We were looking at the 29.5 to 29,752. As you can see, got a nice drop down to 27,976 and actually all the way down to 27,600. So this is a nice move on Bitcoin, especially with leverage, right? With leverage. And that was a nice almost 8% drop. Posted that in the Discord. You get these trades in our Discord, guys. That link is in the video description, but message Lee first, because you can join for free if you try out SimpleFX or BingX. So this was a great trade, but overall, guys, what shapes? We've been over the shapes over and over again, right? These are nothing more than double tops or Gartley patterns, okay? You see this? That's a double top you're printing now. There's your neckline that you're trying to hold. And then, of course, you have the larger macro double top here as well. Very bearish patterns. These are very bearish patterns. Let's get a projection to the downside. If we want to go ahead and use this as an impulse, we'll go ahead and track this way. And I'm going to be looking at the 1618 here off the impulse. Lands you at 24,428. You see this white line? If we zoom out on this white line, this is our larger Wyckoff structure. You see this? This is when we came down back in June of 2022. And then we had our ceiling form at 24,956, so basically 25K. And guess where the 1618 lands you? Right back on your Wyckoff ceiling. So this would call for price to come up and down, land on the ceiling, maybe get another nice double top, or you can get some retracement to the upside, but eventually to come down. So your 1618 is 24,428. Obviously, your 200 is down here at 22K. So this is all bearish structures, but again, it's going to wait and see what happens with the CPI. If you get a market rally off of it, again, I do believe any rally is to fade. Market risk, the greater risk is to the downside, not to the upside, guys. The market has never bottomed. I'm going to keep saying it. The market has never bottomed one time in history ahead of a recession. Not one single time. The market has never bottomed while the Fed is actively raising rates, and Powell just raised rates last week. The market bottoms all happened in October. When did Bitcoin bottom? Bitcoin bottomed in November. So you've had multiple rate hikes since then. The bottom is not in. always more potential for upside. Remember our upside risk I had at 31.4, basically let's call it 31.5. And so that's what my upside risk is. If we get any type of rally off the CPI is 31.5. But unless you get that rally, guys, I'm just looking at the bearish structures, which is why we shorted it and why we got a nice 7.5, 8% move here on Bitcoin. And I'm looking for this to break down further. Okay. So we're going to watch 27.3, 26.5, 1618 at 24,428, and that key support area 25K, basically we'll call it 24,930 here on Wyckoff. If we look at the, get off that, money flow again on the daily, didn't get overbought, coming back down. Volume is really flat. You're getting a battle here between the bulls and the bears on the volume ratio, meaning the actual buying and selling volume. Let's fast forward to Ethereum. Again, I don't see anything I like on Ethereum. I put this out to a 3-day chart, so I didn't see anything on the daily. So I was just trying to look at the ranges here. We do have scalp traders and smaller time frame traders in our room as well, but you got resistance up here at 2001.50 that you almost hit, as you can see. You came back down. Your key support level, just looking at the fib here, the way I laid it out, 786 is 1802. You see that you keep bouncing off of it, and the key resistance is basically 1991, a little bit lower down, 1920, but you're just going sideways and sideways, getting some volatility here within the candles themselves. Not a lot going on here that I see for my type of swing trading, okay? 3-day chart, you're still above the median line, so you're still technically bullish, but you're printing a double top. Your volume ratio, slight bias to the buying side. Looking at the NASDAQ, guys, NASDAQ, again, larger Wyckoff structure on the daily that we've been trading in, going all the way back since, again, summer of last year. Broke out. You're trying to do your Livermore pivot, right? That's what you're trying to do. Now, in the zoomed in, we have our mini Coff structure on top of the Wyckoff, which is the volatility of these candles. You can see the two white lines here, right? But it's perfectly within these two fibs, which is why we keep grabbing these shorts up here at 13.2, 13.3, 13.250. And this is another area. And right now we're just printing a little baby candle. Not a lot of movement. I mean, 19 points on the NASDAQ, spot 15%. So nothing's happening today, guys. We had that big rally up candle after the sell off from the last Fed meeting. Big rally up candle sitting back on top of Wyckoff again. Everything's kind of just waiting and seeing what happens with the CPI. Upside risk 13,417. You want to see if you can flip that base on it, and then you want to get your pivot off of that, okay? Or you're going to hit that potentially, make a bearish structure if you did pump to it and didn't just start falling down with a hot CPI, okay? Upside risk is 13.4. Key area I'm tracking there on the NASDAQ. This is on the daily time frame. You're still bearish here on your money flow as well. Let's talk about stock selection real quick, guys. Lots of people keep asking me, hey, can you check out this stock? Can you check out this stock? I don't trade a massive pile of individual stocks. One of the stocks that I do like to short because I believe AI is a bubble, and same with First Solar with the ESG investing, okay, with energy. Now, I want to show you the difference between being a trader, and it's encapsulated here. The difference between being a trader and being motivated by money versus being an investor, a long-term investor. I don't look for tops and bottoms because I'm a long-term investor. Long-term market always goes up. Great, fantastic. Look at First Solar. Look at the analysts. This is on Microsoft Money. The analyst buys. 27 analysts had it as a buy. Now you guys know what we did with First Solar, okay? Look at, well, first, let me show you the chart. So we shorted First Solar, and you had multiple entries here. I posted it in the room, shared it here on YouTube above 217, right? 217 was my short. 217 got up to 221. Look what First Solar did. A massive 23% drop with 27 analysts rating it as a buy, okay? But we shorted it, and it dropped 23%, again, with leverage, massive, massive trade. Now, you look at this. Why did I target First Solar? Look at the trailing 12-month PE ratio, price to earnings, 462. Just to remember, I think the S&P right now is trading at 19. 19, and you have 462 on an individual stock. This is a garbage stock that doesn't make any money. It's euphoric. It's been on Reddit. It's been on a bunch of different things, ESG investing, solar company, but this is so overvalued. To put it in perspective, Microsoft's trading at like a 30 PE, okay? This is 462. In my mind, nowhere to go but down. Now, having said that, we got great returns on this. I think most people that took this trade are just letting it build its bearish structure here and looking for further breakdown, because I do believe this thing's coming all the way back down into the $60 range for your next major low, okay? Your next major low, you're at 177. We shorted it at 217. This is how you build massive money in the stock market, okay? Trading in the environment, understanding the environment you are trading in. Let's look at another complete garbage company. And lots of people are going to get angry about this. I don't care. I'm motivated by money. Don't give a shit about your personal feelings about one market or another, okay? MicroStrategy. Look at the PE for trailing 12 months. 4,500. 4,500. Why? Because MicroStrategy owns a shitload of Bitcoin. So if you have the market view that MicroStrategy is going to go down, then you would want to trade something and short it that has a 4,500 trailing 12-month PE. Absolutely. Look at the EPS, minus 86. Guys, look at the chart. Look at the chart for MicroStrategy. This is why I was excited up here at 333, upside risk potential to 360, because MicroStrategy is going to go down a lot when Bitcoin comes down, okay? I have MicroStrategy coming down to 102. It's at $300 right now. That is a massive, massive move. And you see the shape that MicroStrategy likes to print, of course, the double top structure, okay? What are you printing right here? Retesting that 333 entry, the double top structure. So when the markets do roll down further, I'm looking for MicroStrategy to come down to the 1618 to 102, take out its October lows, take this out, I guess in this case, January lows, take this out, break through this Wyckoff structure, which you can see right here, guys. I get excited about trading because this is so much fun. You can see the Wyckoff structure right here for MicroStrategy. Made an impulse up, failed. Try to get his livermore pivot, didn't hold the base, failed. Up thrust here in the range, failed. Down thrust, sign of strength, failed. And came back up for up thrust. Now you're building a bearish structure. For MicroStrategy to reverse this, it would have to pivot, either hold the base here, come back up, pivot out to the upside, break 360, hold that for support, and then go up. Okay, that would be your pullback most likely, and Wyckoff, and then you go up to the upside. Not going to happen. It's just not going to happen. So if MicroStrategy does get any type of rally potential back between 333 and 360, this is a stock that I would like to trade, because again, this move will be massive on MicroStrategy. Coming down, let's just grab a candle from the 333 range. This is a 70% move, okay? 70% move down to its next target. This is how you build wealth. And we are bearish here on the volume ratio. One more, guys. Let's look at Nvidia. Nvidia right now, where's its PE? PE's at 164 for trailing 12 months. AI, I think, is a massive bubble. 49 analysts have it as a buy. People are hiding out in Nvidia. Nvidia is pumping back up here as I'm making this. We have Nvidia in this trading range. I posted as short in the room right here at the 786, which is what we just hit, and just pumped through it right here. Nvidia, to me, again, it's looking like it's making this massive double top on top of this range. And this is a stock that I believe has a big downside potential. And this is your Wyckoff trading range that it's pivoting on top of. And this area here, your upside risk potential is 301. Okay. 301. This area here of 286, which is basically 287, 286 spot, whatever that is, 65, 67, up to your 301. This area here is, I think, is a really strong area for Nvidia to be bearish. Lots of money is hiding out here. The PE is ridiculous. They are set up that when they report, they have to be perfect on everything. This is a euphoric bubble, the AI bubble, okay? You don't get the trade at that kind of market premium to the market and not be super profitable and have excellent forward guidance. So I think this Nvidia trade is set up to come back down as well. And this trade is active right now, guys. It's moving up as we are talking. So this is something I'm going to look to be adding to my short here, see where this pump ends, see if we end up holding the 288 or if we come up a little bit higher. Want to see if this double top structure holds in place here as well on Nvidia. Very active stock, lots of money piling into Nvidia. Nvidia bearish on the daily money flow as well. Again, this is one that is going to roll over based on that PE. Looking at our silver trade or our gold trade, guys, it hit and we shorted it in the room, posted this short, been talking about the 2055 range going back for 2 years, got up to 2067, dropped all the way down to 2000. So an excellent gold trade. Gold struggling right now at 2023. It's been resistance. If this plays out, and I'm not saying it will, but looking at the fractal here, okay, so all we can do as traders is just look at what we got here. You got one candle above 2055, one candle above 2055. Will this be the only candle before you start printing some type of distribution box? Because there's your candle. Make some type of distribution box before you come down with the markets, okay? Because again, you had over here, this is peak pandemic fear, right? 2020. And this is peak inflation fear, 2022 of March. And now you have, I don't know what you would call this, bank crisis fear, economic collapse, get your bug out bag fear. I don't know. But this is, if this pattern continues, this fractal pattern, you'll print some type of distribution before this next type of move down, looking for gold to retrace, retest its lows. And again, those lower level targets, guys, when the market rolls down, I'm looking at 1449 essentially if you retest and lose these lows. I need to add my other fibs, running out of time, but we're far away from that, so don't worry about that. But watching this upside, it would be interesting if we break this fractal pattern and do retest 2055 and come up above it, because we haven't done that in 2 years. So that is something to watch, and we'll see if this resistance here holds at 2023, which is where you are now. Shorted silver as well, guys, in the room, posted the trade, had a pump up here, just about to $26. And of course, silver came back down 25.55. And that's so far a nice little trade on silver. And let's see what else we got, guys. Silver. Oh, Tesla. Tesla, people just want updates on this. It's holding its fib range at 173, guys. It's at 171. Again, we shorted this at 208. Another excellent trade. So you're just ping-ponging here, going to see what happens with the market. If you get any opportunities to retrade, I will be updating my opinion on where I would trade Tesla if it does start breaking out to the upside. And my philosophy, guys, is never let a winning trade turn into a losing trade. I always either tighten my stop loss or take some profits off the table when you have big winning trades. Quick update on the CAC. Awesome decline off of my short. Posted this in the room as well. Nice 3.66% move off of nailing almost the exact top. I think I got within $15. And now you have a pump up and you're hitting some resistance here. Basically at your 618 at 74.52. I would wait and see if this holds, and I would wait and see what the American indices do, because they will lead the market, okay? Upside risk here. I like this back up here at 75.35 if it does break out to the upside. Look, quick update on the DAX, basically tracking with the S&P, guys. Just volatility, up and down moves, getting some nice, I guess you'd call them day trading swings here on the DAX. DAX currently at 15,968. This is a good range that I like to trade the DAX in, looking for these bars down, these yellow bars down if I'm shorting up in this area. 1618, your upside risk I have at 16.2. This is slightly laid out, slightly different, 16,137. So upside risk is 16.2. And again, a lot of people are just going to be on pause waiting to see what happens with the CPI, because you're going to get volatility. And you could do this again, you can do that, you come up and then go down. So it's going to be volatile this week, guys. So be careful. Try to get this video out as fast as possible. Leave me your comments, like and subscribe. Hope to see you guys in the Discord. The next video will be out Thursday of this week. Take care, everybody. Happy trading.